everybody, this is Bill Noble from Token Metrics, and welcome to our Crypto Deep Dive series. Today, I'm joined by Seth from MineYourBiz. Not only do we like you, but you have a unique perspective on the market that everybody, your viewers and our viewers, are going to enjoy. So if you're interested in the state of Bitcoin mining, the state of proof of work mining, the ETH merge, and the Solana hack, well, don't go anywhere. And don't forget to like and subscribe to whatever channel you're watching this on, and definitely smash the like button for Seth. All right, Seth, let's start with, who you are and what's your unique angle in crypto. I understand you come from like a tech background. Can you tell us about that?
Sure. So here's Seth Estrada in 30 seconds and what led into MineYourBiz. I was a former senior national trainer for several Fortune 50 tech companies. Top of that list would be, and most recent, Microsoft. Prior to that, Google. Prior to that, Samsung Telecom USA, as well as Dell, AT&T, and a couple of contactless payment companies that launched at about the same time that Bitcoin became popular. After my tenure there, I looked for something that I found more meaningful and that I could be a little more passionate about. The open source community, Linux, and then cryptocurrency and Bitcoin really fit the bill for me. So I jumped in with both feet, and I just haven't looked back. All
right. So let's jump into Bitcoin mining. I had the smartest hedge fund guy I know come in, and forgive me if I'm mispronouncing it. The ticker symbol is HUT, H-U-T, HUT8, right? What is the state of Bitcoin miners? Like, I know a lot of these guys sold into weakness. Tell us what's the latest thing in proof of work. And if you know anything about these miner stocks or miners in general, like, give us an update on that if you can.
Sure. So first off, there's been quite a bit of carnage in both the retail side of Bitcoin and cryptocurrency mining, as well as the institutional side of Bitcoin and cryptocurrency mining. I think you mentioned one, HUT8, that has been mercifully spared by the markets, Bill, but there's a lot of casualties that we've seen along the way now, and a lot of these companies having to sell into weakness because they just don't have any other options to cover their OPEX. It's just that simple. If you stop paying your bills, the power gets shut off and you're no longer in business as a miner. So it's been a very tricky time. And, there's some people who I know who work in that space who've been affected by it. So first off, my heart goes out to the victims of the market carnage. It always claims somebody, right? So that's kind of a bummer to see. But to answer your questions about sort of that whole institutional mining stock and institutional large-scale mining operation that people might be interested in, there are several competitors who compare very favorably to HUT8. I'm not going to mention them right now. I don't want it to come across as a shill fest or me picking favorites at all. But there are several companies like HUT8 that are located throughout the world, have mining operations set up all around the world, so they mitigate the risks of having the cost basis for their power or their OPEX kind of spike out of control or out of their projections. And some of them are formed in various territories throughout the world, so it may be something that's accessible to North American investors, but some of them might not be. So need to kind of say that up front. There may be some of these competitors in the institutional mining space to HUT8 that maybe are not an option for your audience, depending on where you live as an investor. You might not be able to invest in these groups, but they're a great way to go when the market starts to turn. We're going to begin to see who from this downturn is strong enough to weather the storm. And we're going to see who has the infrastructure, who has the reserves, and who is prepared to begin to buy up that blood. When you have the other miners that are selling into weakness, you got to have or the other miners that are selling into weakness, you got to have a buyer for every one of those sales, right? Ideally, right? You have to have the buy and sell orders matched. Well, I think in a perfect world, from a miner's perspective, all of those sales into weakness in the mining sector will be bought up by other miners to help build up their operations. So we'll see a lot of consolidation, I think, in that space, and we'll see a very clear winner emerging in the next several months, for sure.
So any idea what the industry's cost of production is? I know that's like a kind of a yes or no answer, but I mean, on Twitter, it was 14K, and that became everybody's price target. I mean, does it vary? Cost of production, and if so, do you know how much?
It absolutely does, and I'm glad you asked, because that is the bottom line question for Bitcoin mining and any Bitcoin mining operation. What's difficult is the this concept of the cost for power versus the all-in delivered rate, and then the on-shelf delivered rate. So imagine, if you will, you get a mining rig as a retail participant, you plug it in the basement or out in the garage, someplace that isn't bothering you by way of noise, but you then get to put a voltmeter on the end and see exactly how much power it's consuming. Well, you can see that as a line item on your power bill at the end of the month and get a pretty solid sense for how much each kilowatt hour of your electricity is costing you and how much is being consumed by that machine. Well, when you scale that up into a giant airplane hangar full of them, well, you've set up racks, you've set up conduit, and you've set up various different sub panels to run that electricity out to all those machines. You very likely needed to work with the utility to stage maybe an entire series of transformers outside of the building because they don't have enough power run to that warehouse. So there are a lot of hidden costs when mining scales up. But the most recent, the most common cost to run a miner is somewhere between 3 to 7 cents per kilowatt hour, and that winds up providing one full Bitcoin produced at anywhere between $10,000 to $14,000, sometimes as low as 8 or 9, but that's very rare to see a mining operation that can do that at scale.
All right, interesting numbers. We appreciate that. So let's go to proof of work. Let's go to the ETH merge. I'll tell you what I know, and then I'm dying to hear what you know. So obviously when ETH goes, when 2.0, when ETH goes to proof of stake, conceivably there could be a fork, I've heard, with ETH1 and ETH2. You know, ETH1 is said to go down, but a lot of people want to buy that. Is there going to be a day where we have like a proof of work ETH that's used as money and a proof of stake ETH that's like a highway for dApps? I mean, can you unpack the proof of work aspect of the ETH merge for us at all?
Just a little bit, yeah. But that proposal to have some kind of a proof of work fork of the current chain state of ETH, it's, well, I don't have a very bright outlook on its future. I think that that's probably doomed to fail. And here's why. Bill, as you know, something that the entire industry relies on for all of trading and investing, generally speaking, people, especially those who are decentralization maximalists, we need stable coins. And if Circle decides that it's going to pull its support from any fork of Ethereum for the USDC coin, which would then trickle down to affect the DAI stablecoin, and then of course if Tether decides that it's going to pull its support from any proposed fork, well, it's dead in the water, right? It doesn't go any farther than that because we no longer have liquidity to match against our favorite trading pairs denominated in US dollars at least. So that causes a serious problem, and sooner or later, because of that loss of value that would have been locked on those chains, the rest of the value bleeds out and this new chain dies. Unfortunately, that's my take on it. Could play out very differently. Blockchain has definitely taught us to be nimble and, you know, not be too certain about some of these things. We can be surprised for sure. But I think that's what I see coming up if there is a proposed proof of work fork of Ethereum, is that the sort of tastemakers and the ones that are really going to decide the fate of that chain will be the stablecoin issuers, and then to a lesser extent some of the tentpole ERC20 tokens like Chainlink, like your Shiba Inus and others that just have so much value locked that any fork that doesn't have those captive, not going to make it. So that's my first part. Second part is, as far as there being any kind of a ETH1 or an ETH2 approach, this is something that we commonly refer to as second layer scaling solutions. And this is something that Optimism, Arbitrum, and maybe to a lesser extent, side chains like Polygon provide in a dedicated way to Ethereum right now. So even if this new beacon chain merge fails to provide all the speed that Ethereum maximalists hope it will, we already have these three custom solutions that were designed directly to scale Ethereum already. They're already in production. They already scale pretty well. They're not perfect, but they are faster than Ethereum. They carry more capacity than Ethereum, and they already have a pretty significant amount of TVL. I think last estimates were somewhere between $4 and $5 billion value locked across those three chains. So I think they're already kind of helping to carry a little bit of that capacity, and they could scale up to carry the full 200 billion plus of a TVL that Ethereum currently holds itself right now, and share that load across those four chains combined. So there is a way for us to move forward with that already. But some of the proposals of a fork of Ethereum, some of the proposals of proof of work for the money and proof of stake for for the rails and for the smart contracts, I think that the Solidity developers, people who write the code, I don't think that they're looking forward to having that kind of a bifurcated or a split system. I think they want to deploy their code on one chain and continue to have bridges to other places that maybe move fast. But again, that's my take on it.
All right, that makes sense. Now, drum roll, the Solana hack, right? How did it happen? And what do you think, this is going to say about Solana? Like, for example, was this failure so big that they've got to suddenly make big improvements to their network? So is the bad news good news? What do you know about the Solana hack?
Well, first thing, again, expressing my condolences to those who've been damaged by the hack, because they're, just as we saw with Luna and UST, Bill, this affects some people in a very personal and very real way. So if we don't know somebody directly, it's guaranteed that 2 degrees of separation from our circle, we know somebody somewhere who has lost a significant chunk of their livelihood. So truly, apologies to anybody who's been affected that directly by this. What do we say in crypto? You might be able to make it all back in one trade. So don't lose hope. But right now, sorry for the loss. As far as this being a hack that was executed on Solana, what I think has been uncovered at this point is that the main culprit was a kind of lesser known wallet that goes by the name Slope. So the Slope wallet on Solana failed to have the best security practices, and they managed to store all of the seed phrases. Those of us who are in blockchain know this is everything. This is the holy grail of security. This is the one thing you can't share with anyone or ever store in plain text. They stored it in plain text. It was a plain, unencrypted text file that held everybody's seed phrase who had ever used that wallet. As of the last time, the Google Chrome store showed 80,000 downloads of this wallet. So if you'd ever touched it, if you'd ever imported your seed phrase from your ledger, no less, or any other device or any other wallet you might want to use, you were compromised. So it wasn't really a Solana hack per se. It was a wallet hack. And it still shows that this is a permissionless system. These are all permissionless networks. And when somebody says, hey, we made a wallet, it bears a lot more scrutiny before we decide to use just any old wallet that comes along. So, yeah, it's unfortunate, but I think in a way, it is good for the industry to mature a little bit. That said, a lot of people who got into Solana, Bill, they're not like you or me. They don't have the years of experience prior to Solana existing. Many of them were brought into blockchain with their first experience and their first blockchain being Solana. So they were blindsided because there was no renewed push by this project to emphasize security. Before Slope Wallet, there was Phantom Wallet, Soulflare, and a couple other competitors in that space. Only a handful of them actually supported hardware wallet backup. And then Ledger and Trezor, the 2 main incumbents in the hardware wallet scene, didn't have Solana support from day one, which, I mean, I don't think there's a really good excuse for that. I think a VC-backed group like FTX and Solana, they have every reason to go in advance to some of these hardware wallet manufacturers and get that support from day one. I think that's the key takeaway from me, Bill, is that when we see VC backing for a project, there is fiduciary responsibility to protect users. Full stop.
All right. Well, that's actually an angle I have not heard on Solana. There was a rumor that hardware wallets were affected by the hack, but it's interesting to hear from you that, there weren't that many hardware options, which again, our heart goes out to anybody impacted by, the Solana situation. So in the layer 1 world, I mean, do you happen to have your eye on, any play, like whether it's Optimism or any of these other layer 1s that either may benefit from the Solana hack or may do well in any next rally, right? Like personally, I look at the layer 1 rally from last year and I go, God, are all these layer 1s going to make it? Do you have any thoughts on that component? Like what's going to carry forward into the next cycle, whether it's a layer 1 or otherwise?
Wow, it's so difficult to say. Again, we saw that the last rally or the last bull run, there were some competitors that sort of filled the role in the smart contract layer one playing field then, such as EOS, right? EOS. We all forgot about EOS. And I thought about it recently, and I'm not an EOS fan by any means. I hold zero EOS. This is not an endorsement. It's not my favorite project, but it dawned on me, they've never had a hack or a slowdown the way that Solana has, and they've been in operation for years already. No hacks, no slowdowns. They've had all the throughput. So it's just to say sometimes what's old is new again. EOS was accused of being too centralized, which in my opinion, it probably is. But Solana is as well, right? Very similar fundamentals there. But it's like we all forgot, and we went for the shiny object yet again. So I don't know. I think it's too early to say. I think we may find that in the next bull run, we have the next EOS/Solana, and we forget about both. Just really difficult to say at this point.
All right. Well, forgive the cringe factor, but that's why we're always looking for the dark horse here on the Token Metrics Deep Dive. All right, Seth, Mind Your Biz. Tell everybody where they can find you. I know you've got a second YouTube channel, Twitter. Can you tell us about that?
Yeah, absolutely. On Twitter, it's MineYour_biz. And on YouTube, the fastest way to subscribe to whatever my current primary channel is just to go to, in your browser, that's SUB, .myb, like MineYourBiz, .lol, because, when I do the long form content, we do try to keep it lighthearted.
All right. Seth, Mind Your Biz, we appreciate you coming on our show and sharing your unique expertise. We definitely want to have you back. All right. This is Bill Noble from Token Metrics. We will see you next time.